$1.78 billion for a cricket franchise. Blackstone is officially bored of traditional private equity.
Or they just read the broadcast revenue footnotes. But you're obsessing over sports when Merck just dropped $6.7 billion in pure cash for Terns.
Leukemia drugs don't sell jerseys, Maya.
No, but $53 a share for Turn 701 actually makes mathematical sense, which is more than I can say for this cricket vanity project.
Ouch, give me 2 minutes to defend the pitch before you tear into the pharma multiples. The rundown.
Down 12% year over year globally, but China surges 47%. Make it make sense, Nate.
It's the tariff volatility. Dealmakers are terrified of the global trade shifts right now, so they're staying home. Or they're buying cricket teams.
We'll get to the cricket crease in a second. First, OpenAI. They're still on this absolute tear. 2 more acquisitions today. Astral and Promptfoo.
Promptfoo, incredible name.
It's open source developer tooling, and they aren't just buying AI companies to build AI anymore. The tech strategists I talk to say AI is actively running the deal sourcing and due diligence on these deals now.
Which is terrifying. Imagine a model hallucinating a synergy on a billion-dollar merger. Speaking of premium valuations, Advent is taking a majority stake in Salt and Stone.
The deodorant brand?
Premium body care, Maya, Los Angeles based.
Right, $50 sandalwood body wash. I'm looking at the historical multiples for these direct-to-consumer hygiene plays, and they're completely detached from reality.
People want to smell like an expensive forest. Don't fight the tape. Advent knows consumer brands.
I just think private equity rolling up boutique deodorants is a top-of-market signal. It feels like 2021 again.
Okay, fine. If you want traditional finance, Bow River Capital out in Denver just agreed to buy Spur Capital Partners, a classic alternative asset manager eating a veteran venture firm. Consolidate the fees.
Much more sensible, but I know you're dying to talk about sports.
$1.78 billion for a cricket franchise.
Bolt Ventures and Blackstone buying Royal Challengers Bengaluru, which is an insane price tag.
Is it? Look at NFL valuations. Look at the Premier League. Cricket is the second biggest sport on the planet. Blackstone is buying a massive media rights trajectory.
Almost $2 billion for a team that has literally never won an IPL championship. I pulled their financials. The cash flow doesn't justify the check. This is pure vanity.
You're missing the bigger play. My guys in London are whispering that Blackstone's appetite isn't satiated. They're already evaluating a separate stake in the Global Cricket League. They want the whole ecosystem, not just one team.
I need to see the term sheets before I believe they're building a cricket monopoly.
Keep an eye on the SEC filings tomorrow, not for cricket, but we might see Gilead drop a $2 billion move for Uro Medicines. The rumor mill in pharma is completely out of control today.
Well, we do have a confirmed pharma mega deal that actually has paper on it. Merck just dropped $6.7 billion in all cash for Terns Pharmaceuticals, $53 a share.
Buying the blood pipeline, Terns 701.
Exactly. I want to look at the footnotes on this Merck deal because the premium they paid for that leukemia drug is fascinating. The big one.
$6.7 billion in cold hard cash. I keep looking at that number and thinking someone at Merck just panicked.
Panicked is the wrong word. They looked at their hematology pipeline, saw a gaping hole, and wrote the check they had to write. $53 a share is steep, I grant you that.
Steep, Maya, it is a mountain. Global M&A activity is down 12% year over year. Everyone is terrified of tariff volatility, and Merck just casually drops almost $7 billion on Terns Pharmaceuticals, and really, they are paying that entirely for one drug.
Terns 701, and it is a massive deal for chronic myeloid leukemia.
Right, but you know my rule. Whenever a press release calls an acquired asset the quote-unquote crown jewel, it means the rest of the pipeline is basically cubic zirconia.
Okay, fair. I read the footnotes on their secondary assets, and it is mostly early-stage noise, but you are ignoring the actual clinical data on 701. The efficacy readouts are incredibly clean. Merck needs to defend its oncology moat, and this plugs right into their existing sales infrastructure.
I am not ignoring the data. I am looking at the valuation. This is classic big pharma behavior. You wake up, realize your key patents are expiring in 3 years, and suddenly you are at the M&A grocery store shopping hungry.
That is exactly why I hate banker logic. You cannot just slap a multiple on this and call it a day. Merck has the global distribution engine to turn 701 into a multi-billion-dollar run rate asset. If they capture even 30% of the second-line CML market, this deal pays for itself by 2030.
Assuming the FDA does not throw a wrench in the works.
Which is why they paid cash. They are absorbing the regulatory risk because their balance sheet is a fortress right now.
Well, speaking of hungry pharma shoppers, my phone has been blowing up all morning about Gilead Sciences.
The Euro medicines rumor.
Exactly. Whispers are saying Gilead is circling Uro for around $2 billion. It feels like someone fired a starting gun in the biotech space this week.
I actually pulled Uro's latest 10Q last night to look at their cash burn.
Of course you did. Who needs sleep when you have SEC filings?
It is called doing the reading, Nate. And honestly, if Gilead gets Uro for $2 billion, that is a total steal compared to the premium Merck just paid. Uro has 2 late-stage assets that are entirely unencumbered, no messy royalty strings attached.
See, even you admit Merck overpaid.
I said they paid a premium. There is a fundamental difference between overpaying and paying the exact clearing price required to win a highly contested asset.
I will concede the point for now. But if you want to talk about paying massive premiums for contested assets, we need to leave the pharma labs and head to the pitch.
Please tell me you are not going to make a terrible sports analogy.
Better. I'm going to talk about actual sports. Blackstone just dropped $1.78 billion on a cricket franchise, and the structure is wild. Voices. I am looking at these new analyst notes, and the consensus is just grim. Global M&A is down 12% year over year to start 2026. Everyone is suddenly terrified of trade tariffs.
You are only reading half the page, Nate. Yes, the global average is down, but look at China. Deal volume there is up 47%. 47. That is not a subdued market. That is a massive surge.
A surge happening entirely inside a walled garden. The broader Western narrative is still regulatory panic.
Maybe, but the most interesting quote I saw this morning was actually about tech. The strategists are saying AI is no longer just the acquisition target. It is running the M&A process itself. They are using it for deal sourcing and due diligence.
Oh, come on. That is pure consultant buzzword bingo. You cannot tell me an algorithm is doing serious due diligence on a multi-billion-dollar deal.
I am absolutely telling you that. I talked to a corporate development lead last week. They feed the entire data room into a private model and it flags contract anomalies in 10 seconds.
So what, the junior analysts just get to sleep now? Back in my banking days, we lived in the data room. We hallucinated from lack of sleep in the data room, Maya.
And now, a script does the heavy lifting before you finish your matcha latte. Accept the future.
I will accept it when the AI can aggressively negotiate a breakup fee over a steak dinner. Until then, it's just a very expensive search bar.
A search bar that does not bill $800 an hour.
Fair point. Speaking of deals that still need real lawyers, the gossip mill is spinning out of control right now in the pharma space.
Right. We are on high alert tomorrow morning for SEC filings. Word is Gilead Sciences is about to drop $2 billion on Uro medicines, and the paperwork might hit before the opening bell. Spill the tea. I am refreshing Edgar right now, and I see absolutely nothing.
Come on, the ink is probably still wet on the term sheet, but the whispers are incredibly loud. $2 billion. Gilead snapping up Uro medicines.
$2 billion based on what? A couple of biotech bankers gossiping at a coffee shop. Global M&A is down 12% year over year. Nobody is rushing a $2 billion deal right now without serious regulatory cover.
You are so cynical today. Pharma operates in its own reality distortion field. They need the pipeline. But fine. If you hate the pharma rumors, let me pivot to my favorite private equity sports obsession. Blackstone.
Oh, the cricket deal.
Exactly. We know Bolt Ventures and Blackstone just dropped $1.78 billion for the Royal Challengers Bengaluru franchise.
Which is still wild to me.
Wait, it gets better. My sources are saying they are not done. They are actually evaluating a separate stake in the Global Cricket League.
You have got to be kidding me. Are they trying to vertically integrate an entire sport?
Look, I used to build these pitch decks. You buy the team, you buy the league. Suddenly you have immense leverage over the broadcast rights. It is a classic roll-up strategy applied to a pitch.
I just love the mental image of a bunch of guys in Midtown Manhattan pretending they understand leg spin.
Oh, they definitely have a first-year associate furiously Googling what a wicket is right now, probably using AI to do the due diligence.
Which is a real thing now. Tech strategists are saying AI is not just an acquisition target anymore. It is actively reshaping deal evaluation.
Yeah, OpenAI just bought Astral and Promptfoo to do exactly that.
Terrifying. But look, we need to keep a close watch for those SEC filings tomorrow on the Gilead front. If that $2 billion number is real, I will eat my words.
I will hold you to that. Speaking of massive pharma bets that actually have signed paperwork, are you ready to talk about Merck dropping $6.7 billion in straight cash?
Oh, I have heavily highlighted the footnotes on that one. Tomorrow's radar.
I am wearing out my refresh button on the SEC site tomorrow morning, waiting for this Gilead filing.
You actually believe they are dropping $2 billion on oral medicines? I am not buying it.
It works if you are terrified of a patent cliff. $2 billion is just the going rate for panic.
Panic is a terrible valuation metric. Look at the data. Global M&A is down 12%. Nobody is throwing around $2 billion flyers right now unless they are in China, which is somehow up 47%.
Or unless you are Blackstone. They just bought a cricket franchise for $1.78 billion and are already sniffing around the Global Cricket League.
Wait, they want the entire league too?
Private equity does not just want the toy, they want the sandbox.
You sound exactly like a managing director right now.
I know I hate myself a little bit. We will see who is right about Gilead tomorrow.
Check your footnotes, people. We will talk to you then.